Hey traders, happy new year. Great to see everybody back and ready for 2023. Hope everyone had some great time away from the screens, away from the charts, and fresh eyes, clear mind, rested, hopefully. Sometimes it's hard to shake off a little bit of the ring rust. That's a real thing too after a couple of weeks of sort of lower volume and a little less participation. And, for us, a little bit less trading activity because we don't want to wander into these tricky times. But we are we are good to go. Great to see everybody. All right, so let's get to it. A couple things to kick off this session with, and we're going to jump on over to the here we go, the economic calendar. Gang, new rules. New rules? No, new year, same rules. And as we go into Tuesday, we know we're coming out of just that slew of bank holidays. Good habits, gang. Stick with the same habits, same rules. What's going on with the economic calendar? OPEC meetings, gang. So heads up if you're trading oil futures, RBOB, gasoline futures. Be careful. We've got those OPEC meetings as you can see on the schedule all day. Pretty quiet start to the first trading day of the year with just this final PMI and construction spending. Normally, we probably wouldn't even think about those two economic releases, these two hot zones. But since that's all we've got, they'll probably have a little bit more attention, and that'll be that. But as we go into Wednesday, now things start heating up. ISM, that's going to be more of an inflation related number. That could be a market mover. JOLTS, that's a jobs number. And then we get the FOMC meeting minutes, a peek behind the curtain of the discussion before the last decision to hike rates. And these are going to be really what set the tone probably for the first half of this month, if not for the most part this month in general. Here comes ADP. And just to kick this week off, full steam ahead, JOLTS on Wednesday, ISM FOMC minutes, and come Friday, right with the non-farm and ISM services PMI. So things really get heated up as of tomorrow. So might see a little bit less participation, a little bit of post-holiday lethargy. So won't be surprised if this opening session sort of a dull one. And we'll see what happens. Okay, as always, gang. This show is about your questions. And yes, absolutely. Happy New Year to everybody. And let's see what we've got here. And go ahead and type those symbols in, whatever you'd like. First up is RTX. All right, let's take a look at what we've got here in RTX. Now, RTX is in a cool corner of the market. First, I just call you first. I know it's 1A standard. I know, I don't want to call you first, but 1A standard. 1A, the RTX symbol is a heavily weighted symbol in that aerospace defense corner, and I like it. It's definitely valid for buy the dip. We take a look at the structure. Let me grab my drawing tools here. You take a look at the structure of this daily time frame, and it's most definitely an uptrend. And if you take a look here, it's a pretty sustained, established uptrend at that. Buy the dip is valid as long as that's the case. And what's the dip? Dip's going to be right into the wave, right? Dip's going to be right into the wave, and I'll continue to look for opportunities. What does that look like? It looks like the 16th of December. It looks like the 22nd of December. Those are the kind of days that we're looking for where price sinks down into those moving averages. Like that chart a lot. Absolutely. I'm trying to remember if RTX was a symbol that I included in the countdown trader. I believe Trish sent that out. And that was the update for the new year, sort of the symbols that are on my radar to kick off the new year. So you can check that out over at countdowntrader.com. All right. Next up is, let's see. Praveen says, I can't find the Sunday evening YouTube videos anymore. Is there a change to the schedule? Praveen, I just took a couple weeks off. We'll be picking that up as of this weekend. All right, next up, Frank. How are you? Good morning. Join the mastery. Oh, very cool. And the YT videos. Well, I appreciate that. You're going to get a lot more of me, Frank, in terms of not just daily time frames, which is really what we focus on here in Charts and Coffee, but you're going to get, as of this morning, we're going to be kicking off a 2-hour intraday and a little bit of daily time frame scanning. We'll be day trading as soon as the show's over, 9:20 in the chat room. So welcome. Cool. Good to have you. All right. Next up. Love the HPMRs. Hey there, Martha. Me too. Me too, but I'm a little biased, right? That's what happens when you create indicators. It's easy to fall in love with your own work, but we do eat, as they say, our own dog food around here, which is to say, before I ever release something, it's going to be put through the paces and road tested for, I guess, anywhere from minimum 6 months. I think the DPMRs are going to be close to 9 months by the time we release those in March. And so for those of you that are curious, okay, Rog, what's coming up? Hey, pencil it in. We have our first class and our series of webinars coming up March 4th. So pencil that in on your calendars. It's going to be here before you know it. Is there a way to set an alert when the ES hits the HPMR throughout the day? Absolutely. HPMRs, Martha, have built-in alerts. I don't love alerts dinging off at me, mainly because I'm on the mic so much and it can be distracting for everyone on the other side of the mic. However, you can turn those on. I believe by default they are off, but if you go into the settings, you'll see there's an ability to turn those alerts on. All right. Being first is not a bad thing. No, I appreciate that. All right. Next up, Fernando, AFL. Bullish setup. Sure, let's go take a look. Absolutely. Now, I will show you something here, and this is really, Fernando, really cool symbol. Let me show you something kind of neat here. And that is, let's sort of frame this out. Let's separate non-trending environments, what's in that yellow box, with the green trend and the green box, and then what we have right now, back to green, right? Okay. Really important. And I do like for a bullish setup. You're 100% correct. Here's your trend. When we go into chop, stay bullish. Back to being bullish, right? I think what happens for a lot of traders, and I'm glad you mentioned bullish, is they go bearish in that environment. And that's the exact opposite of what we even want to see. We don't want to go bearish in there because this is now actually, take a look at your slow stow. This is actually support. And in that support area, the slow stow says, hey, we're oversold. And that's actually a buy level in there. So yes, I do like it for a bullish setup. Let's see if we either go neutral and get another oversold stochastic, or we pull back into the wave. The other thing that I would do with AFL, and I don't know the answer to this, so I'm actually curious myself. So if we go take a look at AFL and ask ourselves, what else in the world of AFL could be maybe in a trend or maybe even in a higher quality trend, right? So let's see what we have here. Take a look at AFL, and we know that this is going to be in, I know KIE comes into play because KIE is that insurance ETF. I definitely know KIE would come into play. So if I take a look at the KIE symbols, if I take a look at the other stocks that are hanging out with AFLAC, then I know that I'm looking at Allstate, Arch, Globe, Hartford, Travelers, Chubb, right? Quite a few. So it makes sense to also crack open the KIE. And but I do like the long position for now to just keep a really close eye on those subtle transitions, because then the trigger for the entry is distinctly different. They're all buys, but where and how are we confirming the buy? All right, next up, Sia, good morning. What are my thoughts on, let's see, TSLL and downtrend? not only on the daily, but also on the weekly. So bearish, uh, AMZU, ditto, not only on the daily, but also the weekly, and AAPU. Now I'm gonna totally tell you straight up, I have really very little uh, exposure. Even I don't track. So for example, those of you that are wondering, what is this? It's very interesting. These are, if you take a look, especially the last two, which are much easier to sort of discern, but this is a Tesla 3X. It's a Tesla 3X. And this is the Tesla 3X bull, right? See ya? Then you have your Amazon, AMZU. So I don't usually play those 3X and 2X and the different sort of hyper leveraged. However, these are going to do the same thing to your point. I don't really look at these, and I'm glad you brought these up. They're usually pretty illiquid depending on the symbol, but Direction does have quite a few of these leveraged ETFs. TSLL, AMZU, AAPU, these are all going to be basically plays on the underlying. So they're not going to be any different than my thoughts on Tesla, Amazon, Apple. All right. So thanks for the question. And that goes the same for any leverage product. I'm going to look at the base first and then decide, okay, do I want to go leveraged or not? Which frankly, I usually do not. Hey there, Mr. Walker. How are you? The euro dollar woke up today kind of strong, but that has now created a pullback on the euro that quite frankly I've been waiting for a while. Now, is this by the dip? Absolutely. Take a look at the structure here. Green trend that accompanies that. Lots of green grab candles, right? And that means, staying above the 200 propulsion, big deal. Pulling back into the wave, which is what we're seeing right now, big deal. And those are things that I'll look for to confirm whether or not I want to be long the euro, which is to say short the dollar. Now, considering the hot zones we still have to come that are going to be very US dollar, treasury, and even index movers, remember that it's going to be tricky. Yes, this is a buy the dip from a perspective of structure and price. But remember, the hot zones that are coming are going to add a lot of volatility, especially to the dollar and the euro. So be careful, Mr. Walker. I'd rather probably time an entry like this of a very macroeconomically sensitive symbols, the biggest currency pair on the planet. It's the biggest symbol on the planet, euro versus US dollar. I'd probably prefer to time it with Jolt's FOMC minutes or even Friday's non-farm. So be careful, because if we enter before that, those are hot zones. Those are high volatility events that we're just going to have to, sort of gut through, if you will. Higher volatility means what? Potentially higher risk, of course. All right, Pfizer. Hey there, Darren. Do I like Pfizer to the long side? And that would be yes. Those are my thoughts on Pfizer. I want to look for opportunities to buy. Now, the longer Pfizer moves in this fresh, if it stays here even, the longer it moves in that fresh neutral environment that it seems to be embracing, the more I'm going to be looking at my slow stochastic reaching down towards the low of the range. Coming off the high is overbought, getting down towards the low is oversold. And the closer we can get to that, and if we do stay yellow on the multi-trend trend reading, then that slow stochastic becomes more important. If we transition right back to green, that slow stochastic almost doesn't matter, quite frankly. But I like the long side, absolutely. All right, next up is Wells. Sure. All right, taking a look at Wells, and XLF with the rate hikes, we would presume in some ways would benefit bullishly from the hawkish Federal Reserve policy and action. But we just really don't see that. It's not been a market that's been able to hold the uptrend. So a big part of what we do in the Sector Secrets room, as many of you know, is we crack open the ETF. And we ask ourselves, all right, what's going on within it? And where's the relative performance? Wells, I'd have to say, from the standpoint of, for the most part, wanting to be bullish, Wells would not be it. However, if you said, Rob, if we want to be bearish financials, where would we look? Wells, Bank of America, that's number one and number two, right? If I wanted to be bullish, really easy, Schwab. And then after that, I start to discern between neutral trends, and I get a little bit more specific to when a market is neutral, how do I know if it's in the bullish or the bearish hemisphere of being neutral? What's up, puppy? What's then the nuance between above or below the 200 propulsion, etc. So Wells Fargo long, no, my friend, cannot. However, if you ask me, Schwab, sure. Goldman, possibly. Berkshire, yes. Maybe Morgan. For the most part, Schwab would be number one. My most bearish symbols are going to be Wells and Bank of America. All right. So next up, looked at the RTX chart trending on the daily. Can I take a bounce off the hourly wave? Thanks for the question, Aston. So really what's interesting about that question is just not, it's not a yes or no. It's simply the difference between the way I look at multiple time frames as opposed to, well, what a lot of other traders tend to do. If you and I, friend, are gonna talk about the hourly, it's gonna be because we like the structure of the hourly. I am not a fan. I have not, almost in a decade now, advocated this idea of, well, if the daily's bullish, then the 4 hour should be bullish. The 4 hours bullish, and I only want to trade the 1 hour to the long side. I don't do that multiple time frame confirmation. I did for probably the better part of 2 decades. And I've stopped doing that the last 10 or 12 years. In fact, not only have I stopped doing that, I've reduced my trading life blissfully to a 5, a daily, and a weekly time frame. And I got to tell you, that simplicity has made life a lot easier. But for those saying, but Ron, I love a 1 hour. Cool. Find 3 time frames that you're going to focus most of your attention on. So maybe it's a 1 minute, a 1 hour, and a daily. And maybe try it for a week or so and find out if your decision process isn't better. I kind of ramble on about that because if you and I are going to talk about an hour, I really don't care at all what the daily is doing. But to your point, I would prefer the daily be bullish if I'm going to be bullish other time frames that are shorter than it. It just does seem to work better, but it's not necessarily a confirmation of a trigger, right? So your point, if I've got a green trend, now I'm just going to wait for a pullback into the wave. So same setup, I'm still going to look at structure, and then structure is going to dictate strategy, and I'll look for a pullback. And then here's where it gets really kind of cool because for a long time, I did not trade 1 hour time frames because I really had a difficult time showing traders, hey, here's where the automated levels are apart from the Darvis. DPMR, sure, they're okay I'm sorry, hourly price moving ranges. HPMRs, they're pretty good, but they're gonna help more so on a 5, 3, maybe 15-minute time frame. But what about when we get out to the 1 hour or the 4 hour? That's where we apply the volatility study of the DPMR. And you'll see me do that a whole lot more. So my simple answer to that is absolutely, Aston. But again, I'm not as concerned about the daily here. The 1 hour really has to have the structure and good eye because it sure does. It sure does. All right. Can I show you all how we do it on time? Can I show the V-score support and resistance on Goldman? Yeah, absolutely. Let me go over to that volume layout. And here we go. So I'm not sure. I'm assuming, I shouldn't assume, but I'm going to presume it's the daily. And if we're looking at support and resistance, I'll tell you what, let's see if we can't hold. This would be the level I'm watching. Let's see if we can hold the anchored, the A VWAP, the A VWAP right there, that white line. That would be a big one. It's a neutral environment, neutral sideways wave. I'd like to see it hold the mean of the standard deviation of the V-score. And that's going to coordinate with my bullishness as long as we're above that anchored VWAP. And by the way, for those of you wondering, Rob, when are you going to re-anchor your VWAPs, especially in the daily time frame? Not for a few more weeks. I'll still stick with the, instead of a 12-month look back at this point, we're looking at 13, and that's fine. I don't mind to keep that first of the year 2022 still active, at least probably through most, if not all, of January. All right. So as always, I appreciate all the Happy New Year. Yeah, you all do. Absolutely. Absolutely. Donald, we're going to take a look at bonds because I still am quite bullish yields, I'm quite bearish yields. I am presuming that yields are going to continue to drop, but until they do, we'd have to trade what we see, not what we think. But to your point, yields are dropping today as ZB and TLT seem to be moving higher. All right, gang. I'll see you tomorrow, same time, same station. We're going to get back to our schedule during the holidays. You notice we took some time off. I hope that you all did too. We took some time off from the Raghee report over the weekends. As of this month, as of this new year, as of this weekend, we'll be back on our regular schedule. Charts and coffee 5 days a week, Monday through Friday. Raghee report on Sunday evening. 6:30, but we're sticking with that 6:30 start time on that Sunday Raghee report. Be good to each other, gang. I'll see you all in the rooms shortly.